UMH Properties owns approximately 134 manufactured home communities with approximately 25,000 home sites. We've been very successful buying turnaround properties, doing capital improvements, upgrading those communities, and adding new manufactured homes as rental housing. From 2011 to date, we've added 10,000 rental homes. We know, we've been doing communities since 1968, so we have a 55-year history. We know as you get the occupancy above 80%, the communities become efficient, and eventually you can get to maybe as good as a 30% expense ratio. But even if it's 40%, it's that occupancy above 80% that makes them profitable, and those rentals homes do that. So that's what we're doing. We're making acquisitions, building expansions, buying turnaround properties, and growing the company all these ways. Well, UMH was founded in 1968. I believe somewhere in the 90s we became a REIT. You become a REIT for the tax benefit of being a real estate investment trust. You become a REIT for the liquidity of being a publicly held company. It gives us capital to grow. We pay our shareholders a dividend. It's been very beneficial for us and the shareholders to be a REIT. The REIT format, with your Sun, ELS, and UMH and manufactured housing, we're the smallest, but we've grown, substantially over the years and continue to use the vehicle to grow, adding, approximately 1,000 rental homes per year and purchasing additional communities. Number one is the national lack of quality affordable housing. People estimate that lack between 4 million and 6 million units. All real estate is local, so it matters where you are. But we find in our markets, when we upgrade these communities and add rental homes, it generally attracts a waiting list. Our homes generally rent for $1,000 per month, being 3-bedroom, 2-bath, 1,000 square foot homes on 5,000 square foot lots. People are willing to leave, their existing apartments and other forms of housing to come into the housing we provide. So we have substantial experience doing this. We also sell homes. Our sales have been increasing year after year as our size increases. We've built expansions in, very good demographic areas. Duck River, south of Nashville. We're building Cinnamon Woods in Maryland. So we have these, and we've done Sebring as a brand new community. All of those expansions, new communities, are built to generate sales income, and we expect that to work too. Well, UMH is into workforce housing, so we certainly have to worry about, how the workforce is doing. Fortunately, today they're doing very well. I think there's higher paying jobs for the blue collar worker and more ability to relocate and ship jobs at most times in history. But again, a blue collar recession is something that would be, quite a problem for us and the country. So we worry about that. You worry about the next COVID, you worry about war. Government regulation can be an issue, but UMH has done a very good job controlling our expenses so that we're able to raise rents just 5 or in some cases 6% on new occupancy, right? So we have 30% rental home turnover. We can go to market, and this allows us, it makes a greater percentage of the rent increase hit the bottom line without our rent increases being excessive. We are the only pure play rental affordable housing. We started doing rental manufactured homes in 2011, pretty much before there was built to rent or, conventional homes bought by the rental home REITs. We started renting out homes in communities. We're up to 10,000 rental homes, but nobody's more affordable than us. When you look at, $1,000 per month, $12,000 per year, the household income necessary to afford our product is lower than to afford any other rental home product. In fact, 100% of our income has been deemed social by 2 independent sources and 100% of our income meets HUD's definition of affordable. So we are the only true pure play affordable housing rental company on the stock exchange that I know.